Hey everyone, it's Saturday morning, March 8th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, it was another roller coaster ride on Wall Street yesterday, closing out a pretty volatile week. Markets bounced back after a rough few days, but let's be honest. Uncertainty is still the name of the game. The Dow Jones Industrial Average climbed about 0.5%. The Standard & Poor's 500 also gained 0.5%, but still posted its worst week since September. Meanwhile, the Nasdaq Composite rose 0.7% after officially slipping into correction territory on Thursday. Now, the big headline of the day? The jobs report. The U.S. economy added 151,000 jobs last month, just short of the 160,000 expected. The unemployment rate? It ticked up slightly from 4% to 4.1%. This was one of the most anticipated reports in a while, as investors look for clues on whether the economy is actually slowing down. And guess what? That weaker jobs number has markets hoping for rate cuts from the Federal Reserve sooner rather than later. But hold up. Federal Reserve Chair Jerome Powell isn't exactly jumping on that bandwagon. He made it clear yesterday that the Fed is in no rush to cut rates. He basically said, let's wait and see, which wasn't exactly the reassurance investors were hoping for. And with the Fed's next policy meeting coming up on March 18th and 19th, all eyes are on what they do next. Of course, we can't talk about this week without mentioning the ongoing tariff drama. Trump announced he's pausing tariffs on most goods from Mexico and Canada, giving markets a bit of breathing room. Canada responded in kind, delaying its second wave of retaliatory tariffs. Mexico, on the other hand, hasn't made a move yet. So, while this isn't over, at least things have cooled off, for now. And finally, one bright spot in the market, Broadcom. The chipmaker issued a strong second quarter forecast, which was taken as a good sign for AI demand. That gave tech stocks a bit of a boost, especially in a week when AI names have been under pressure. So, what's next? The market will be watching the Fed, keeping an eye on trade headlines, and bracing for more economic data. Buckle up, it's going to be an interesting few weeks. That's it for today's Capital Markets Quickie. See you back here on Monday.